Establishing a reliable trading strategy is a major milestone, but for many, the next hurdle is the math of the account itself. Even with a system that works, a lack of significant capital often prevents a strategy from generating meaningful income. Look at a $2,000 personal account. A 5% monthly gain yields exactly $100. Scaling that same 5% return to a $100,000 account changes everything. After the firm's 20% split, that month puts $4,000 in your pocket. Proprietary trading firms like FTMO provide the capital to bridge this gap, allowing retail traders to manage professional-sized accounts. A back-tested strategy loses its utility if the absolute dollar return is too low to change your financial situation. FTMO's model allows successful applicants to manage up to $200,000 of the firm's capital, with the trader retaining up to 90% of the profits. This creates a decision point. Is this the most efficient way to scale your talent, or is it a system designed to profit from failed evaluation fees? Each year, FTMO generates significant revenue from traders who pay for evaluations but fail to adhere to the firm's rigid risk requirements. Success with FTMO requires your personal psychology and trading plan to be in total alignment with their specific, non-negotiable risk parameters. The financial commitment for a $100,000 challenge is a one-time fee of approximately €540. This fee grants you access to their two-stage evaluation, the initial challenge phase and the subsequent verification phase. If you pass both stages, the €540 fee is refunded in full alongside your first profit payout from the funded account. However, you are fronting your own capital for a high-stakes performance review. Violating a single rule means you lose that fee entirely. This upfront cost filters out casual speculators, but it also means you bear the financial risk until you are successfully funded. The most critical boundaries are the 5% maximum daily loss limit and the 10% total drawdown threshold. These rules enforce institutional-level discipline and prevent emotional overtrading by providing a hard stop to losses. The difficulty lies in the lack of flexibility. There is no wiggle room if the market moves against you. If a volatility spike breaches that drawdown limit by even $1, it triggers immediate account termination. Strategies that utilize wide stop losses or long-term swing trading may be fundamentally incompatible with these tight loss limits. FTMO's consistency rule ensures your success is repeatable. As this chart demonstrates, if one lucky trade accounts for too much of your total profit, it can trigger a violation. On standard accounts, you are also restricted from opening or closing positions during high-impact economic news releases. The firm is looking for methodical traders with a systematic edge, rather than those attempting to profit from news-driven volatility. This restriction adds an administrative layer to your trading day, requiring constant monitoring of the global economic calendar. Success requires choosing a predictable strategy over the high dopamine potential of massive singular windfall trades. As of 2026, there is no longer a maximum time limit to hit the profit targets, provided you trade for at least 4 days. This change removes the pressure to force subpar trades simply because a 30-day deadline is approaching. Without a deadline, the responsibility for pacing and patience rests entirely on your personal discipline. Removing the clock is a significant advantage for those with the psychological endurance to treat the evaluation as a marathon. FTMO functions as a performance amplifier. It takes your existing trading habits and scales them up, whether those habits are professional or undisciplined. If you lack a defined strategy or struggle with position sizing, an evaluation is premature. Build your edge on a smaller scale first. If your approach relies on high-leverage gambles or news events, FTMO's monitoring systems will likely terminate the account quickly. The ideal candidate is a trader with at least 3 months of consistent profitability and proven drawdown control. For a trader with that specific profile, the evaluation fee represents a logical business expense with a high potential return on investment. Because FTMO requires execution without errors, you must verify your consistency before risking your €540 fee. FXNX provides the environment necessary to bridge this gap and prepare for professional-grade evaluations.
Using NX1's tight spreads and fast execution, you can utilize NX Analytics to test your strategy specifically against FTMO's rigid drawdown and consistency parameters. Take the time to prove your mathematical edge on an FXNX demo or small live account before you commit to a prop firm evaluation. Access to $200,000 in funded capital is a reachable milestone for those who develop the discipline to trade within these strict boundaries.